The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. This is Larry Pesavento for TFNN. If you have any questions, it's 877-927-6648. And there was a really interesting comment today on Bloomberg. The oldest company in the United States started in 1730. Stevenson Clark, it's a shipping company, actually are closing their doors. Their business is down so much that they're closing the doors after, can you believe that? That's 280 years. That's hard to believe. Anyway, it was really surprising. I would think someone would buy it just so that they would say that they owned, the oldest company, in the United States. But who knows? Also, an interesting thing is Penn State University. Most of you know that are going through a lot of problems with the this sex abuse thing that they had to go through, and so they've decided to allow the players' names to be put on the back of their jerseys for the first time ever. The problem is they don't get to be seen on television for 5 years, so that's a little bit late in my opinion. But at least they made some movement, to the positive side. Okay, let's start with the markets first. The ones that are really look interesting right now is we have the Treasury bonds are approaching the 147 level. The Treasury notes are hitting the exact 786. So this is if you wanted to buy bonds and you wanted to buy notes. In other words, you're looking for, an interest rate, then this is the spot you'd want to take a look at it. You certainly don't have to risk very much from here. And so these patterns are complete. I put them into Tiger TV. And you can take a look at them when you get a chance. But the key level in the Treasury bonds is the 147 level. We're now trading at 147 3/4 or 24, 147.24. So we have to see what happens if the thing holds the 147. Right now there's a divergence because the notes are holding up a little bit better than the bonds. As far as the stock market, it appears to me that we are we've been at these key levels of 114. Excuse me. I got to get the right number. 1,400 in the S&P and 13,200 in the Dow Jones Industrial Average. So both of those numbers have held up pretty well. Now, what I'm going to try to do this morning is to give you a few ideas of where I see a whole lot of divergences, and one of them, because we're on the we're in the commodity show today, the copper. If you'll take a look at the chart that I put into Tiger TV, you'll see the huge divergence that we have in copper. We've had a tremendous move up in stocks since the solar eclipse and full moon of the lunar eclipse and full moon of June the 4th, and yet copper has not even been able to make a 61% retracement of the July high. I mean, this is really a very, very, bad indication, at least for, demand for copper. I mean, that's the way it would look to me. There's lower tops all along the way, and the rallies are shallow. The open interest is drying up in it, so this is telling us that there's a possibility that, maybe this breakout that people are talking about in stocks is really not a valid one. And, we've already talked about the fact that the New York Stock Exchange Index still looks incredibly bearish. It's a totally different picture than we have with the S&P 500 and also the Dow Jones. And, we're also getting ready we're in the time zone now for a head and shoulders pattern to form that we've been talking about, for quite some time. And that would be happening, over the weekend. Now, as far as the Bradley model goes, this is, either today or tomorrow is the last day. And the reason why I say the last day is that I was looking at, August 3rd. That was August 2nd was actually the full moon, and because the Bradley model date is so big that the larger planets have orbs that last 3 to 4 days, and if you take the last one, that would take you to Friday. So that means if the stock market is up on Monday, the Bradley model is flat out wrong, and I have to look at something else because the patterns are still holding, but the market's not going down. I've called the people in New York, and I've asked them why the market's not going down, and they told me that there were more buyers than sellers. And I said, well, that sounds interesting enough. So that's all I need to know. There's more buyers than sellers, so we'll keep in mind that that's what we're looking at. The NASDAQ has gone up to the 786. This is the third time in the last couple of days that it's hit that level. So that also is holding in the zone that we're looking at for the market to turn down. And believe me, when I put out a report like I did where I was so very, very bearish, and I've been wrong here for the last 5 or 6 days. I mean, the market hasn't screamed a lot higher, but it's every cut is a death by 1,000 cuts. So you have to actually get ready to call uncle and say this thing is totally wrong. And if we're up on Monday, that would be it, because I went back in history and looked, and you'll see from history that it doesn't go past 6 days, and that's the case. Now, what usually might happen, like it happened in 07, is that you have this last little run up, and then for some reason the market turns down. But we will not know that the market is following the Bradley model until we really start down and we take out the low that we made on that last full moon on August the 2nd. So we'll know that for sure. Well, nothing is for sure, but we'll know a great deal of information if we in fact do that. The $64 question is whether the bonds and the notes have finally topped and we're getting ready to go. And if we decisively go below 147 in the bonds, I believe that that's the point that we would be looking at for a beginning of the interest rate move to the upside. And there's so many people that are still bullish, the bonds, that you're going to get plenty of chances, to sell a Gartley retracement, much like we had at 152 when they rallied up there last week. There'll be other, rallies that we'll be able to look at. The gold market is still acting, relatively well. We're up still a little bit today. We needed to get above 1630 in the gold. The gold mining stocks are still, doing relatively well, particularly, the Newmont and the XAU. Both of those, are going up as we had hoped they would, given the fact that they gave that beautiful, bullish Gartley pattern. And on the bottom in the XAU, and then also the butterfly pattern in the Newmont mining. So both of those are holding up, very nicely, in my opinion. Now, we have some really important things happening in the commodity markets that are growing. And, of course, we are aware of the drought that's going on in the Midwest with corn. And it is beginning to affect, we said when we first started doing this thing about the drought, which was way back in May when corn was at $5, we had Rich Anderson on from Anderson Capital Management, who also is a cattle farmer and cattle raiser, I guess. Cattle rancher is how he's called. And he said that we were going to have some higher prices in cattle because as the price of corn goes up and the price of soybeans, which is the meal which they feed to the cattle, this makes them go higher. And as you can see, we have I put it into Tiger TV. We have a bearish Gartley, forming in the cattle up at this 123.75. So we're going to be having a little bit of resistance there, but long term. It appears that we're looking at some serious price increases in our grains, and also what happens is because it takes I think 50 bushels of corn to make a pound of beef. You can imagine what the price of beef is going to have happened to it. And then also, the price of corn is the same thing. It's very, very expensive, and this is going to cause the price to go up for chickens because, chickens eat, corn and meal and things like that. And we had a USDA report today, and it basically confirmed what the charts have been telling us all along, and that is that, we have had a tremendous bull market here because of the drought. The next price objective that we're looking at in corn, if you get a chance to go into Tiger TV, you'll see that price comes in at the 1.618 expansion on the long-term weekly charts, and that comes in at the 846 level per bushel. And corn has never been this high, and if it gets much above that, we could be looking at $9 or $10 corn. Now, there's a big difference between the corn and the soybean crop, because the soybean crop, we're into August now, and if we get some good rains, we could save quite a bit of the soybean crop. We could certainly do that. But right now, that corn crop, Dr. Miller has sent me some pictures, and frankly, I've never seen it that bad in all my years. Even back into the 40s and 50s, I can't remember ever seeing, corn that looked this bad. This is it's really a disaster for many of the farmers. A lot of them have crop insurance, so they're okay, but it's still a very, very bad situation, for them. Now that they're on, and realize this is our largest crop. Corn is our biggest single growing crop in the United States, and it affects everything all over the world, because people come to us when they need grains, and that's what those things are used as leverage in negotiations. If you don't believe that, you're being really naive. And that's the thing that you got to keep in mind, that the reason why wars are fought are because of power and lack of food. So this could be something that if it gets any worse on a worldwide basis, we're looking at something really serious. Now, I'm going to tone that down a little bit. I don't want to scare anybody, but the next chart that I want to bring up is the chart of rice. Now, this is rice traded at the CME. It gives a pretty good indication of what worldwide rice is looking like. And as you can see, the rice has just completed a big AB equals CD pattern. It has not participated very much in the move that we've had in the corn and soybeans and wheat. So that's telling us, looking at this particular chart, that it's not a problem on a worldwide basis yet, because most of the rice is consumed in Asia and in China, Asia, Southeast Asia, and also India, and that's far more consumption of rice than corn in the world. So this is a good thing, because it tells us that it's not critical. It's not the end of the world, Al Gore type thing. Where global warming has, taken us to a crazy, spot. Now, this has been, Tom O'Brien brought this up on his show yesterday. We got to take a little break. 877-927-6648 if you have any questions.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks. And if you have any questions, it's 877-927-6648. And I wanted to, what I thought I'd do today is to show you a wheat chart, because we've looked at wheat many times over the past year. You know, we were bullish wheat, and, you know, we've had a tremendous move. And now we've had this huge extension. And if you get a chance to go into Tiger TV, there's 2 great lessons in here. And the first one is at point C, when we have the AB equals CD move, when it explodes out of there like it does, that move will almost always be a 1.27 or 1.618 of the AB move. Now, in this particular case, the market being in a weather market, a drought market like we've never had before, we're looking at a 2.618 expansion, went exactly to that price at the 948 level in the wheat. And now what's happened is that we are forming a bearish Gartley. What's interesting here is that we have this bearish Gartley forming in wheat pretty much right where it is now in this 914, 916 per bushel level. And it's at a time when the USDA came out with a very, very bullish report. So, everybody knows that the price of wheat has gone higher. So this is the kind of trade that you really like to have if you're a pattern recognition trader. The problem is because it's a weather market, and believe me, you're in the middle of August now, so people already know that it's hot there, and they haven't got much rain, so that's pretty much in it. The best way to play this would be to buy about a 850 put or something like that, a 850 September put in the wheat, or you could do a December too, which would be okay. Not risking more on the price of the put of around $800 to $1,000, and that means you're not going to be a farmer. You're going to be selling short, and so you'd be looking for the wheat to go down. Now we're going to follow this one next week. Just to see if it works, because this is in the middle of a really, it's the worst drought we've ever had. I mean, July was the hottest July in the history of the United States since they've kept records going back 130 years. So this is really record setting. Now we're going to see if this pattern works or not, but the risk here is about 30 cents in wheat, which is $1,500, but the profit potential would be several dollars a bushel, which would be $10,000. So this is the kind we look at. We'll watch this, much like we looked at the Australian dollar when we were looking to sell it at 106 the other day. It's working a little bit, and just keep an eye on that. And also Apple, when Apple was up around that 622 area, it was making, the big ABCD. Hasn't gone anywhere, but, those are the patterns that we're looking for. So this is the reason behind this is to, see, where we are within the pattern and all the news that's coming out. It really gives an indication of why pattern recognition swing trading is valuable. And believe me, it doesn't work all the time, but nothing else does either, folks. And the sooner you realize that, and take responsibility for your own trades, you're going to be far better off, than you would already think of. I have to tell a really great story. I was helping my sister write the obituary for my Aunt Dorothy this morning, and she said, what do you remember? One of the funniest things, and there were a lot of funny things. But when we brought her from the farm down to the nursing home about 8 years ago, we had a really nice place where she had her own apartment until she had to go to, full care, which she's been in for quite a while. But for that time that she was taking care of herself, we had to put up some paintings, and of course, her favorite painting was the Elvis painting on the crushed velour, whose eyes moved as you walked across the painting, and so we were joking about that, and she said, I've decided to put up a mirror. She said, because then when I walk by, she said, I can see the prettiest woman in the room. And she was in her mid-80s at that time, and my sister and I and my other cousin were laughing so hard that we really thought that positive attitude, really permeated, all of her personality. So even though she's gone and she'll be missed, I'm sure she's in a happy spot. And I appreciate everybody that sent those nice, thoughts and emails. But okay, anyway, the second part of the show, we're going to be starting that in a second, is I want to go into some of the timing things that we work on at the hedge fund, just to show you some of the, the different timing things we look at besides the astral things. We look at some dynamics of, geometry. We look at regular time counts, and we look at, certain triangles. So I'll do that right after the break. 877-927-6648.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back. 877-927-6648. This is Larry Pesavento for TFNN. Now, I posted into the Tiger Den and the Tiger TV a chart, a long-term weekly chart of the S&P OEX, which is the cash. And if you'll take a chance and look at it, you'll see that, there's some cycles there, some time cycles that are quite equal. And, we have them coming up, right here, right now. Whether it works or not, we don't know. But it just shows you the repetition that is in the market on a longer-term basis. We see it on a shorter-term basis, but that's the same thing that we're looking at. And, we've talked about the divergence, at the beginning of the show between the Russell and the NASDAQ and the transportations and also the utilities, and so all these are giving us indication that this is not a breakout to the upside. So we'll see if this is going to be a turn in the market. It might not be, but the evidence is beginning to point that it could possibly. I will also put into the Tiger TV the long-term chart going back a year on the NASDAQ, and believe it or not, folks, we are at the low that we made last year in the NASDAQ on August the 9th, and here we are today, August the 9th. So, we're 365 days into this cycle, and we've hit the 786, several times, and we've been there 3 times in the last 4 days. This is equivalent to what's happening, of course, in Apple because of that big ABCD that's there, and it's so heavily weighted. And so that's my opinion, of course, but that is what I'm assuming is happening with the NASDAQ and Apple. That pattern is also complete, and we want to be mindful that if it does go quite a bit higher, then that's when we have a problem. So if you have a big blow off move on the upside on the Dow, Dow up 100 points or more, S&P up more than 15, there's something seriously wrong with my work. And in fact, there's something seriously wrong with it already, but it's not quite that serious. But it could get a lot worse, and you don't want it to get a lot worse. And that's the whole reason for doing it. If you did the SDS, they're down a little bit, but very, very little compared to what the market has done. So that could be a positive sign. Now, the next market that I want to cover, we brought up yesterday, and that was the chart of natural gas. And we had a natural gas report today. And, it was quite bullish, and the market, had a very, very big move that came up, I think, about 10 cents, which is a large amount in the natural gas contract. And what I've done is I've put in the natural gas futures on the daily basis so you can take a look at it, and you'll see that the CD leg was 1.27 of the AB leg. This is very similar to what happened in wheat. So the problem is that we don't know whether it's going to stop at 1.27 or 1.618 or 2.618. So you have to use other things. You have to look at what's happened over the last 5 or 6 or 7 days to give you an idea if this is a spot to look at. And that's what we're doing in the stock market. Even though the stock market has gone up, it hasn't really violated anything, especially with the New York Stock Exchange Index, which is the best thing that we're looking at. Now, I'm going back and forth. I want to go now to the hourly chart on the natural gas, just to show you, what's happened, with it over the last, it's been the last 3 or 4 weeks, and I will, show you the pattern that we're looking at here, because it really has some, really nice, implications for, what we're doing, because in the past, few hours, we had this move where the market went from 286 per cubic feet all the way up to 310. That's a huge amount, folks. And that 310 level was actually the exact 61% that came in at around 13.10.10. So this is what we're looking at with the natural gas. Now, what we would like to see, if this is the high, this could be the C leg of an ABCD leg move, and that would give us the price objective on the daily that we would like to see, which is down about 30 cents from where we are now. So we have to be patient and wait to see if this is going to transpire and give us this target. But down, there's nothing to do today. I mean, you just have to wait and see if we are, on the right side of this thing. Now, we need to take a really hard look, of course, at the U.S. dollar index, because, we have, been at this level for a long time now. And the euro is not moving very much, and not only that, but the stock market and the euro were usually going hand in hand, and they stopped doing that a few days ago. So that's another indication that maybe this U.S. dollar index is going to hold this 82 level. We were looking originally for it to get to 81.90. We only got to 82.05. That's pretty close, but that would be equivalent to 125 in the euro, and we certainly didn't get that high in the euro. We only got as high as 124.40, and that tells us that maybe it's a little weaker than what we have. Our longer-term price objectives on the euro have not changed, folks. They're still down in the 118 to 115, and below 115 you're looking at par. And remember that the euro has had swings from 65 all the way to 160, and then 160 all the way down to 85, and then back up to 160 again. So it's a really wild swinging currency, but it trades as beautiful as anything you could ever ask for when you're looking at pattern recognition swing trading. There's just nothing like it that I've ever seen in my 50 years of things that we're looking at. Now, on the longer term period for the U.S. dollar, we've had quite a few rallies over the last several years, going back to 2010. And I posted an interesting chart into the Tiger TV that shows the 5 different rallies that we've had. They were all almost perfectly equal. This last one is missed by just a little bit in the dollar index. But this has potential to be a bearish pattern because we have lower tops and we're coming in at a 61% retracement of the previous high. So, we're at a real critical level here in the U.S. dollar index, as we are with the euro. So this is why they're fun to trade, on an hourly basis or on a 15-minute basis, whatever, one you like to see. 5-minute is good. And but the longer-term picture in the U.S. dollar is still basically in a bearish market, but frankly, it's starting to turn up. And this next little pullback here that we're in right now, we're in the 3rd week of a correction. And if we can explode above the 85 level, around 86 in the dollar index, that would take the euro, on its way south. Then we would be looking at it. Now, since we're on the currencies, we really need to look at that Australian dollar trade that we were watching at the beginning of the week. I believe we first looked at it on Monday, and we've gone up there 4 times now to hit the level. I mean, this is, I hate to use the phrase mother, God, and country, but this Australian dollar trade has got everything in the world that you could possibly ask. There, you've got a 3-drive top coming in to the exact 786 at that 106 level. We're trading at 105.70, down about 30 pips from that level. You've had several lower highs, and you've had 3 higher highs on your 3-drive up. And not only that, but the last 5 days have been incredibly quiet. I mean, they've been just, there's no, extremely wide-ranging bars. That doesn't mean they can't come at any time, but it's been very, very quiet, and it's an ideal trading environment because you certainly don't have to risk very much at that particular time. So this is one that we're still in this one, and it's given you 50 pips profit 3 different times this week. So it still looks correct. Everything is there, and if it is correct, it could have a move of at least $2,000 or $3,000 for the $40 risk that we're taking, at that particular time. Now, I think it's important that we take another look at the euro because, that's a big percentage of the U.S. dollar index. That's in the neighborhood of 53% of the actual price of the U.S. dollar index. And we've been waiting for the euro to, get up to this level of 125.25, which is the ABCD. And today's low that we made just a little while ago is within very close of the 61% retracement, which would come in at 122.55. That's what we would be looking at to see if it's going to, come to that level. But right now, we're just 3 days down. It's having a normal correction. There should be some support in the euro today or tomorrow between 122.55 and 122. If it gets much below that, then something is really really, really wrong with it. But right now it's just doing just a normal correction, and nothing exciting, happening to it at all from what I'm seeing right here. Now, the problem, it's not a problem, but it's a situation in the market because these markets will react to an outlier event. And, something would be like Germany decides to pull out of the EU, or Greece does, or something like that. Greece would not be an outlier event because they're already expecting that. But something really crazy to happen. And, for something really crazy like Obama's not going to run for re-election. I mean, that would be an outlier event. And the markets would probably react, a great deal to that. But other than that, what we're looking for is the market to, it's been in a downtrend, the euro. What else can you do? It's been going down for weeks and weeks and weeks. It's given you lots of different chances to sell it. And, we really wanted to sell at that 125 level, but we haven't been able to reach that level. Now, the interesting part about the euro chart, if you'll take a look at the euro on the daily basis, is that we had this huge move when Mario Draghi came out and said they were going to defend the euro at any cost, and the euro went from 121.50 to 124. Now we're trading considerably under that high. So everybody bought into that statement is now sitting with a very large loss. And so, it's hard to react to that news because, just because people say something, doesn't mean they're going to follow through. And that's what basically happened. They just didn't have anything, to do with making the euro stronger. There's just too many problems that they have that looks, at least that's what the charts are telling us, that it's going to make it difficult, to get anything done. But the markets are very, very quiet. We have very little volume going on in the New York Stock Exchange. It's really slow, and that's usually a bad sign. It could pick up. We know the bonds are very, very close. They keep going lower today. We're very, very close to the 147 in the bonds, and if they get below 147, that's going to be a key test, and we will know if, in fact, the bond market has, in fact, turned. So we will, keep everybody up to date on that. But, everybody's watching it. Basil's watching it. Steve and Tom are watching it. And, Kate doesn't do futures, I don't think. But, this is a real important thing that people are watching because this has been a 30-year bull market in bonds. And when this thing turns, folks, it's not going to take any prisoners. I really believe that. And I think there's so much money out there that has been chasing, higher yields, that they could get into some serious problems, if these things do start to turn, because everybody tries to get out of the door at the same time. The door is never big enough to get out. So that's my opinion, and we will take a look. Now, I want to take a look at the since we're in the commodity hour. I wanted to give a quick section on crude oil because we have been approaching this long-term AB equals CD pattern that we've been waiting to hit. We got as high as 94 and change today, and it looks like we are looking for the market to get up into this 96, 97 level, and that's where you'd be looking to put a short on. That would be a very large head and shoulders pattern on the crude oil over a 1 year time frame. But frankly, the oil's been up about 8 days in a row, so a normal pullback here would be expected. But we still are looking at the zone of around 96 to 97 in the crude oil, for a place to to be a seller of the crude oil. And if you get some good dips, you can buy those, and we've had a few of them over the past few weeks, but nothing really, really dramatic. Now, the one that we've also been watching is the gasoline futures, and the gasoline futures are also heading up to an ABCD up around that $3.11 per gallon barrel. We're at $2.98 right now, and so this is a pattern that if we get there, I would be recommending the short side of this. Someone asked me a question about doing options, and I don't do a lot of options is probably the greatest understatement of the year, because I do options very, very rarely, and only when the markets are going absolutely crazy and you're getting tremendous value for your puts. So anyway, we'll take a little break here, and then we'll finish up the show. I want to talk a little bit more about the stock market. 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back, ready to wrap up the show. 877-927-6648, but frankly, there's very little time. Someone asked me that the Fed was going to hold rates low for the next 3 to 5 years. I put a chart in going back 200 years. It actually is the start of our country pretty much, and it shows the interest rates at that time. We have never had interest rates this low. This is even below the 1937 depths of the Depression. And so what I believe has happened is Bernanke has tried to forestall something really serious in our recession group because he didn't want to be on watch if we had another depression. And so they've had QE1 and QE2. Neither one of them have worked. We've added a couple $1 trillion during the last 4 years. In Congress and Senate, just spending money and, bailing out banks. That's not been good. But history says that, the money is actually determined about who wants to borrow it. And frankly, the credit card people are pretty easy because they charge 18, to 25 or 29%, for the usual public. And but if you want to go in for personal loan or try to get a mortgage now, just getting a mortgage is not easy for some people because they really have strict requirements now. And so the actual interest rates will be determined by the public, not by the Federal Reserve. They can push it down for a while, and that's what they've been doing. But frankly, I think they've done something that they will learn to resist. Remember that Bernanke has never, signed the front of the check. He's always signed the back of the check. He's worked as a, college professor and consultant and stuff like that. He's never owned his own business. And frankly, when I watch Romney get up there and the fact that the man has been successful and they're ragging on him because he's made money, he ought to just say, okay, here's my information. Why can't I see my opponent's information? And then we'll get this stuff sorted out. I mean, there's nothing wrong with making money, for God's sake. I mean, that's what capitalism is for. Uh-oh, I got up on my soapbox. I didn't mean to do that. The last thing I wanted to bring up today, since we were talking about the Treasury bond, is the big pattern in the bonds that we've been watching for such a long time, and it's already starting to work. We've had this this pattern that has been going on for a great deal of time. I'll put it in again because we did get up to our level right near, we were looking at up in that 152 to 154 level. That thing is complete now, that butterfly pattern. And we're getting ready for higher interest rates, regardless of what the what the Fed does. This is my opinion, of course, and remember, opinions are like body parts that have a distinctive odor. Everybody has it, and they usually smell. So just remember that you have to protect yourself in these markets and take responsibility for your own trades. That's for sure. And believe me, my responsibility here is if we're up big on Monday in the stock market, I will have the crow on the stove, the garlic will be in, and I'll be eating crow for the rest of the week. So it will be an interesting diet of pure crow for the whole week. But that might happen and it might not. Right now I'm expecting it probably will happen because it should have turned by now. It hasn't done very much. If you look at the New York Stock Exchange Index and some of the other things, it's really not very, hasn't gone very far. Okay, I end the show by saying everybody have a wonderful weekend. And, try to help people that have less than you. And believe me, there's a lot of folks out there that have less than you, and especially if it's someone that's been in our armed forces, because they really need a lot of help. And if you do travel a lot and you have extra miles, give them to the Fisher program because it really helps the families. Anyway, may God bless and have a wonderful weekend.